Good morning, everybody. So I'm just updating now videos about charts, sorry, about the after the monthly and quarterly close. That's why I'm on quarterly chart. So first of all, where did we stop on this quarterly candle, which is a big green candle we had? I just wanted to point this out. If you follow me, we have some order block here, this green candle here. And if we look very simple here, we just put a line, a trend line. I will put it thinner so you can see how precise it was. And this is just exactly where we stopped there. So we stopped on this order block for now. And that's interesting to point this out because we have the second level we can look at in case we push a little bit up, which I don't think will happen now, but everything is possible. I don't think, I repeat, it will happen now. I think we will have a correction because of the big monthly setup we have, bullish on the Euro USD and bearish on the um, on the DXY. But as said, we don't know exactly what will happen. So it's possible we still go a little bit higher, perhaps to this 106.97, let's say 107, sorry. That's still possible. So we are now inside this area. Another thing I wanted to point out here is if we look at Fibs, okay, if we look at Fibs here, if we draw the all-time Fib, let's say, there, okay, we have here, right there, if you look well, right on it, and check the low of this candle, 76.98. Make sure this is the right place, 76.98. So we have the perfect position of it. Same thing on the upside, but on the upside it's already done with the magnet tool. So we have here, right inside this big order block, this big quarterly order block, we have that 61.8 or 6, in this case 38.2 Fib. We reversed it, extend on the right, so you can see it always. So it's something important to keep in mind because this is a big Fib there. And if we look back, always look, you see how this spike here stopped right on what is today the 38 or 61.8. It's exactly the same thing at the end. So you see this is a very strong reaction in this area. And if we look, so you see it was a monthly close, probably a quarterly, a monthly high, a quarterly high, and let's see, we had a yearly high too there. So you see it here. So it was the 9089 high. So this is important to keep it in mind in case we would go a little bit higher. And we have the two extremes of this huge quarterly order block there. So what we can do here, just to keep it in mind and take off the Fib because then the chart becomes too crowded. We just put it there as a reminder, and we have it here. It's the 38.2 all-time Fib. Okay, so now I can take this one off and we have a cleaner chart. So that's what we are looking at now, and that's the chart I am looking on the big time frame. Okay, so other thing we have, you remember we have a broken trend line here. I just did it, I put it already, so I don't have to draw it. This is the trend line we had. It was a daily trend line with those two touch here. We came back inside it, which is something very common within price action from the price action point of view. And this trend line is more defined by this area here. I just put it a little bit bigger because when we go on smaller time frame, we have this area with the bodies here, the body here, and the bottom right on the spike. So that defines an area, and we see how very precisely we have been mostly respected it. So we came back, broke through it. Sorry. So we were bouncing on this trend line. We even bounced a little bit here. Then we have been struggling. We broke through it. Then we come back on the trend line. We pull back once. We had nearly a double top yesterday on the monthly close. You see here, we have a kind of double top with this high here. Okay, mostly, of course, but on such a time frame, it's not a big difference. So we have an accumulation here. We have there what I already call and spoke a lot in my Twitter feed. You have this huge this big consolidation. So you can take it there. If we take the bodies on the bottom, we can take it a little bit lower. If we take, for example, this low here. But what is important to look at is on the daily and the monthly close, and we closed under it. We went up there yesterday inside this momentum pool, and we closed again under this bottom. So it's important to note that because as I expect, we should see a continuation on the downside. So you see, when we came back to this level here. When we came back inside before seeing a pullback here again, we saw a first pullback. On the first move, we went up there. So we spike under this area, but I would say this is the mostly the consolidation area, and we have a little bit close on a monthly and daily yesterday under it. So I think we should see a continuation on the downside. That's what I am expecting. For this, what we can use in this case, we can use a daily chart. We go in a high Fibonacci candle, and if we consider this is an A, B, C, we can have a projection in case we respect, of course, this high here till we respect this high, that A, B, C is still valid. So we could draw it like this. ABC with yesterday high. Okay, we extend it a little bit, and that's what we would get for now. What is interesting to sorry, I want to make sure this is well here. Okay, this is okay, perfect. So you see this ABC that is freshly born, I would say, is there. With the high of yesterday. Of course, if we break those high, this ABC is no more valid. But for now, it's one of the roadmap we can look at. You have this 236 here. In this case, the target would be the 61.8 first, and then the one-to-one extension here at 103.70. Okay, so that's what we have for now here, and nothing has changed on that. We are still inside this move. Still, Euro USD is respecting his low, is like kind of double or triple bottom low on the 61.8. I will go back on that later, and finish now first with the DXY. So that's what I'm looking at now on the downside, this small ABC here. If we look at this on upside potential continuation, because we always need to have both view. So we had this impulsive move up, which is a very nice impulsive move up. The top is here, and it's creating an ABC. Okay, so same thing, we can measure that one. I already posted that in the previous videos. So you can draw it, I would say, like this. If we draw it on a quarterly basis, this red candle here is a little bit bothering me. So we can look on a higher time frame. In this case, we can take the yearly and we would have probably that big ABC on the yearly. So it's always interesting to look at what we would have. We could consider this high, this low here. So this one, as you see, is giving a projection, a very far away projection. We go up to 125, blah, blah, blah. That's not what I expect due to the reading of the momentum exhaustion indicator we have. And in that case, you have the other big thing I'm looking at, which is this huge yearly ABC. And this one, just to finish probably there with the Dixie. Sorry, I'm looking at what I'm doing at the same time I'm speaking with you. So you have that huge yearly ABC down in this case. Okay, I will put it a little bit thicker so we know it's the big mama, as I say always. So you see, we have this move. We went down to the 50%, then we came back inside the 236, which is, by the way, a normal pullback. And then if we look for the 61.8, we would go to this level here. That's why that is, I would say, in line with the indicator tools. So we would see first the 67, 69 level, which would be the lowest ever seen. So that's something I'm looking at. That's something I'm, I would say, sorry, I think could very well happen due to all what I posted already in my Twitter feed. So always looking both sides because we can be wrong. Observation is generally true if we are objective on the observations, but analyze can be wrong. Our analyze to say this one is stronger than the other one that is looking up there. So always keeping both in mind, but I like this one more for now due to the confluence of that ABC with the indicators reading, I would say. So now if we look at it on regular candles, just to make it simpler, so you remember this is the big ABC we are speaking about with the top here. We have the top here. So you see we have been respecting here. Let me put it extending right. Okay, so we have been respecting here in many occasions the 236. We broke a little bit through it inside this area between the bottom, the 0 and the 236. And we stop, if you remember what I said at the beginning, on this quarterly order block. And we have the broken trend line, so we can zoom in a little bit more. We remember we put it darker, so we know that this is the big mama, as I said. We put it like this, okay? So we have here the big 236. That is very important to break down under this. As soon as we will break down under this, we will surely come back to retest it, and then we will start seeing the acceleration as soon as the analysis in this case is right. Okay, so that's something we need to keep in mind and look at always because we can have different configuration, as I said. Okay, so this is where we are. We zoom in again to look at the daily intraday situation for now. Important to look at this level here, this 236 level. We can put the price to have a better detail there. And we see it's the 104.93, more or less 105 level. So this level, if that ABC is confirmed, of course, this level should be holding, and we should see a continuation on the 38.2 here, where we stopped yesterday. So those two small moves inside here seems to be confirming this ABC is in place because we respected it here on the bottom of yesterday, and we look like to be respecting this 236 here on the upside. So that's the way we can have a clear or better indication about what's going on, and if we are respecting the structure we are looking at. This one will be validated only after some move down, and we can use those level here, and we put them in the middle. We can use those level here to have some indication, to have some support and resistances intraday, looking for some move inside there, using those levels, something perhaps we could see something like this, go up there, come back, break this one, come back up, and so on. You see how it could be, and that's something that could happen. Anyway, we have those levels, and we can use them together, of course, with the regular support and resistances we are using every day. Okay, so I did a small pause, and we keep on speaking now about Euro USD on the monthly close. So this is where we are now. Let's go on the big time frame, like always, to start the discussion with some good information. So, first of all, I want to point out the same thing as I just did on DXY. You see those bottom here. When you look left, you see this big quarterly order block right there in the middle of this move down. And you draw this line, boom. That's exactly where we stop. That's why I went long here. The other reason why I went long in this area is, you can see the same, by the way, to finish with this order block. You see how it has been holding the price. Okay, so concerning this Euro USD, what do we have? So let's look at some Fibs research or ABC information we could get. So first of all, let's try this big all-time, let's say, retracement. We see we have nothing really relevant here. If we would break this area, we would have the 78, 670, 640 area right there. That would be probably the next area of interest in case we would break. So I would just highlight it. That's what I do. I do it live with you just to show you how it works, or at least how I do it. I'm not saying that's what I do is the only thing to do, of course. So this is where we are now. Then we can take off this fib now, and we can look at this move here. So we have something that could look like some ABCs. So if we look at this, same thing on a big long-term view, you have that A, B, and C. That could be something interesting to look at. Okay, so this is the yearly view. So if we draw this one, and we want to see how we are reacting, how it is working, if it is reliable according to what we saw. So the first thing is we have this bottoming area here that has been strongly holding the price in the last period of time. Break here, of course, would be an event, would be something important to look at. We could have a phase break, and then we would come back. Then, so this bottom was here. So this is the 236 area, and we see we have had, we can look at it on a regular candle point of view. You see we have had some reaction in that area. That's where the yearly, this is a yearly chart, remember it. If we look at the quarterly or monthly, for sure you would see some reaction around this 236, which is validating this in a certain way. Okay, 236 is really key, and you see that even in the past, when that was not in place already, we had a reaction on the other side here. The other reason for that is, for sure, we had some order blocks, or we had some support and resistances in that area that have been holding the price. So this is the first thing we can look or thing to look at when we are looking at Euro USD. And in this case, as you know, we go quite high to 151 and 133. That would be the next big area to look at. Okay. The other way to look at this would be to consider this impulsive move down we have there, which is a very nice impulsive move down. We can probably look at it better on a quarterly or something. As you have this impulsive move down, so A, B, and C. Okay, so if we look at this way, which is of course, a good way to look at it, we have here the ABC. And we have right on our bottom, you see it here, the 61.8 of that ABC, which is the reason, one more time, why I went long here, together with the indicator information we had from that. So I will just put it a little bit darker so we see. So you see very well this confluence here. And usually an ABC has two very big targets, 61.8, 1-to-1. Of course, if we would look at this 1-to-1, we are at 0.90 on the Euro USD, which looks crazy, but it already happened in the 2000s, so why not? And we have this area with the two, the 76.40 and the 78.6 area, which is right under the big all-time fib that I just put here. So we would have another very important area of interest there if we would break this bottom. A break of this bottom with a close, a weekly close at least under it, would be something to really look at, and that would probably open a new view on what is happening now. Okay, so I just did a pause. I was looking at the market on London Open. So now we come back on this chart where we spoke about the importance of that bottom area here, which is the big 61.8 ABC. And then if we take it as the upside move, which is what we are looking at, we have the 131, 151, blah, blah, blah. We already said all that earlier this morning. Well, so very important to finish or look a little bit again about this bottom, because if we go there, we need, as always, to have a plan to know what we will do. So a break of this level, if it would happen, would not be dramatical, would not say this is over on the upside. It could be only a scare move, take some pips under it, like a spike under it, and then bounce again from it. In that case, sorry, in that case, we would perhaps even not touch this 61.8 here as 1-to-1. As I said, I don't think that will happen now, of course. And in this case, we would need to look for some support and resistances on the left and see what could be helping us in our decision process if one day we would break this area. Okay, so what do we see here? We see we have there a small but very interesting order block. And if you look, that is very funny because you see how market is never random. You see that this order block is right in that same area here. Exactly. If we look at it, I have not prepared that in advance. I'm doing my job like I do every day or every end of month. If we take this one here, boom, we are in the same area as this 61.8, 78.6, and the other one that we have there. So you see here, we will have something strong that would happen if we would break this area, which is not what I'm looking for now. Okay. Now, if we look a little bit less big time frame, if we try to look at the monthly time frame, you see we have nothing really relevant there. We have some support resistances that we could draw that could be helpful, like this spike there. I will put it in another color. So that could be something to look at in the future, but I would start looking at it closely only. Let me have a look on the weekly. I would start looking at that closely only if we would break this bottom of the quarterly support and resistances. So we see we have here at the same place where we have those fib, we have a strong weekly accumulation. That's a very big. This is the order block, by the way, on the bottom. So this is a very big accumulation of money here on the way up. Accumulation, and boom, the next leg. Okay, so that's what we have. Now we come back to the present time, and that's where we are. So yesterday we had again this push down. We had a first push down here on the 15th. We had another push on the 30th of the month close with another leg of downside of the Euro USD, and we have been bouncing here. That's when we bought it yesterday. So that's where we are. Intraday, what I look at now is two things. We can look at two things. We can look at as A, B, C here, upside. So we can get this one. Let's put it in Fibonacci candle. So that could be the ABC. As soon as this bottom is respected, and this ABC would give us some, sorry, that's a retracement. Anyway, we look where we stop. We stop mostly on the 88.6 of this retracement, so which is not bad, which means continuation in the trend of the previous, of the measured retracement, which is this move up. If we look at this one, do we have anything? 88.6, same thing. So nothing really relevant there on those fibs. Then we look, as I said, at that ABC extension. We take this one, this low here, let's say this high, let's take this high, sorry, and we take this bottom. So in that case, you see we have the 1-to-161, the 1-to-1 extension at 106.04. We have the 1-to-72 at 107.10. You remember I'm looking for the 107.30 area, and we have those fib inside here. So let's take it better, more precise, because we need, when you do this job, it's very important to have a precise bottom and make sure you're right. When you use the magnet, usually it's very right. But when you have like a line here, trend line, it can be that the magnet is taking the trend line and not the real bottom. So in that case, we look at this candle, we look at the lows of this candle here is 103.588, okay? So we make sure that the bottom of this thing is well at 103.588, and you see that's exactly what we are. So that's very good. We have a good start there. Then we look at the 4-hour chart. We can move this one here. Nothing will change. We can move this one there. Nothing will change either. We still keep the same lows. And we are now here. So we bounce. We came back on the 236 of that bigger move, okay, which could be an ABC. As soon as we keep this low, let me put it better, it's not right. We can take the low of this candle, 103.82.6, and we make sure we have that, 103.82.6, like that. We are exactly precise, very good. So 103.82.6, very good. So you see, we went up, we broke through the 236 in the night on yesterday move, which posted, by the way, nice bullish 4-hour candle. We came back here on the 236 area, and we could be bouncing from it now, which is what I'm looking at. So we go inside a little bit on smaller time frame. Let's take the 30 minutes. I just posted this thing now, but we can look at this. So you remember we have those bigger ABC here, and we have this impulsive move of yesterday. So we can look at this as an ABC, same thing, and look for the intraday targets. That's what I do, and what we do with the students in the mentoring. So we take this ABC here, for example, we take this one, change the color to have something cleaner and easy to read. Let's put it green. Okay. So as soon as we keep this low, and so as soon as we keep this low, nothing, and as soon as we keep this low, we have this first target, which is a 38.2, then the 61.8, 104.98, and then the 1 to 1 there. That's what I just posted on Twitter. If we break again this low, then we need to move the bottom on the ABC as soon as the B is not lower than the A, of course, which is the rule of the ABCs. So that's where we are now. You see prices is pulling back in this area. So when that happens, if, for example, I have there, let me look at my indicator charts. So I look while I'm speaking with you. If I had, which is not the case, but if I had a long call there, then we look for some inside support. You can take, for example, the 4 hours. The 4 hour is always interesting to take because we get some insights there. Market is not using only one tool. Market is using everything. So you take your 4 hour thing there, and you go back to the 15-minute chart, and oh, that's magical. No, that's not magical. So you see, we are bouncing from this one, and we could now run and break the 236.8. That's what we are looking for, a break here. Same thing as I just explained with the bigger ABCs. We break, generally we come back there, and we go to the next level. The 50% can be broken directly. It depends on what we have here. And that could be, I'm not saying that will be, but that could very well be today's scenario as soon as we keep these lows here. Okay. And we remember we had this low here right at the 725, 730 GMT. So it's important because we know that this time area is a time area where we use or where we can see some reversal. So we will see what happened now with this one. And if we keep like here, we have another bottom. I think this is a daily double. No, this is not. Yes, this is a daily thing here. Weekly perhaps. I don't remember why I put it there, but there is something here. And then we will look at the reaction, and we will look if we can see a continuation of this. The other way to see where we are is to see how we retraced inside the impulsive move. So for that, you just take the fib, you put your retracement there. This is the top here. And you look where we stop. And we stop mostly on the 50% of that retracement, which is not bad. We could look for the 61.8. In that case, we would move the bottom of the ABC there. But for now, we stop in the 50% area of this thing, which is not nice. Let me look now at the daily candles. So we have there another important thing, which is those daily lows. Okay, so let's put here, this support here is very important because this is the volume of the daily lows. And now when we are working intraday, looking for something to happen and reading our indicators to see how is momentum, gauge the momentum to make sure if the momentum is exhausted, or suggesting we can use a support and looking for a bounce, or if the momentum is not exhausted on the small time frame like the 5 minute, even the 3 minutes sometimes when we have a very strong trend. So that's what I look at right now. So right now I see we have some first sign of what could be exhaustion on the 3 minutes. So I'm looking, and we have been responding on it now. Okay, so we can consider in this area we will see a continuation or another potential bounce of sorry, I'm taking, I just took, because while I'm doing that with you, I'm trading at the same time. So we can see now a little bit of continuation of that thing here. We go back on the 15 minutes. So you see that's what happened this morning. We have some strong bullish, bearish candle, and each time we have a bounce, we come back here, we bounce, we come back here, we bounce, we come back. So now the important thing is we keep those lows. That's crucial, and probably we can bounce from this level there. Okay, that's something important too to look at. So that's what I'm looking at today. I'm still looking for the upside targets we have. So we spoke about those targets here. Let me put it, extend it. So 61.8 is there, but you have understood. You just readjust your ABCs as soon as the ABCs has moved. So we have it there perfectly. So now we readjusted it, and we wait to see what's happening, and we observe the price action, because the price action is telling us how the market is behaving. So we see we have strong push down. Those push are due to the habits of the people or the retail that has been selling and selling each spike in the last days or hours. They will keep on selling till they see something that they believe will be a turn. I'm not trading that way because I have my plan. My plan is to be long till we respect the very important bottoms that I show you on the monthly, yearly big ABC, the big black bottom of there. So that's that's my plan. I get long and I keep on getting long as soon as I can, because the potential on the upside is several thousand pips, and the potential on the downside, in my opinion, will be less fast, less aggressive, and has less potential due to the fact that we have had, and we are already, if you look at this monthly chart, we are already inside a deep move after this M shape. We are inside the deep move at the bottom of this M shape. Same thing, another thing we know can be bottoming after the M shape like this, 1, 2, 3, 4. Okay, so that's what we have. I will make more updates inside the months. What you can do when you have this chart, for example, here, if you see some monthly order block or things like this one here, you know there will be a reaction in that area when we will come back. Okay? I hope you enjoy the videos and have a nice day and week.